All right, ladies and gentlemen, I hope you had a wonderful weekend. Last week was absolutely insane. We had all of the big earnings, the data, and a downgrade. And now this week we got CPI, PPI, and a couple more earnings. But what we need to talk about is not panicking just yet. So what I mean by that, we had a lot of volatility last week, and everybody wants to know if this volatility is going to pick up. And really, we have to look at the calendar ahead of us, because I think that will have the answer alongside the bonds, which was the main story last week. So we got a couple of data sets, have a couple of plays. I got a couple of plays I want to highlight, but this week has potential to be big. It's starting off August, but these aren't the main events, and really, it's like towards the end of August, that's going to be the next checkpoint with Powell. So whatever we see this week, it's going to leave us in a pretty interesting spot, and I have some levels and other things we're going to talk about. So I got all of that. What I need from you is a thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/thestockmarket. We are live every single trading day. You could come for the news, plays, whatever you want, but we will have the data, and we will be live for the CPI this week. I didn't wake up for the non-farm. So, Chad, we'll see what happens. I don't know why I'm wearing this G-Eazy jacket, but we got Uncle, so shout out to Uncle. And what I need from you, today is Sunday, tomorrow is Monday, and this is the random account generator. So I was looking at the plays that we have, but what we do with this account, we started this a couple of years ago, and what we ask on this watch list, you post a random option trade, keep it below $100, post the strike price, expiration date, all that good stuff, and tomorrow morning, we are going to do a random comment picker and pick one. So I don't know, it's been like a good, the bad, like an option trade. I don't know, like the video, but let's talk about this week now. So I will go over the calendar, and we will go over the events, but Thursday is CPI, Friday is going to be the PPI, but what I really want to talk to you about is not panicking just yet. So it's very simple. If you didn't see last week, it's clear after the last 40 to even like 90 days or longer, we haven't really watched the market go down like that after a downgrade. Bad Apple, good Amazon, but then all of this run up, and then everybody asking about Japan, the currencies, and then the commodities coming back up, all these different things. And then even starting August, you finally watched the market go down. We started going down at the beginning of the week, and then you ended the week going down. You haven't really seen that over the last couple of weeks, but what I want to remind you of is that other points leading up to this, we've had these pullbacks after melting up, and well, all of these pullbacks are what led into this rally. So it's very simple what I'm trying to say here. It's either we are going to watch the onset of panic and volatility emerge and materialize before CPI and Jerome Powell, or chances are, unless the CPI makes us have any of that volatility, we will get a little bit of range boundness, but we don't necessarily have to move too much until we get Jerome Powell on August 25th. Now, granted, if anything happens with energy, the war, or other things could materialize, then yeah, we're going to have a problem. But for the most part, what I'm trying to say here is that the markets are moving and reacting to things, but there's also a schedule and a calendar as we start to approach the final months of the year. So that's what I'm starting with, and the way I'm looking at it, I think we are either going to come down to the lower range around here. It makes a little bit more sense. You could see some of the ranges when we pull up the TD Ameritrade. Pretty much ever since we broke from like 4,400, 4,450, it kind of got crazy from there. At one point, 4,400 was the real like, wow, that is really high. So I think if we do start coming down here, this is why I'm talking about this week being so important, because there's a big range. It's either we see some big moves and break down, or we might break down and then get some of the data. People cool down after like a week and a half of this, and then we set the new range until the next set of data. So what I'm looking at, it's either we have two options, a range above 45 or 44.50 and higher, or we stay below 44.50 all the way down to like maybe 42.50 leading into Jackson Hole. Now, obviously, that's That's a wide range, and I'm talking like 2 weeks ahead of time. But to start off this week, I hope you see where my mind is at after last week in the bonds. What we've been seeing, we need to watch. Does panic and volatility, does it materialize this week, and does it materialize after the CPI? And if it doesn't, I think all eyes just get shifted right to the calendar moving forward. So that's why I'm saying, obviously, we're getting volatility. Should you panic yet? Not really, but you should definitely keep your head on a swivel. But now it's working us into a month that could have a lot more action, and it doesn't have to be right now. But if people do react, then we'll get some excitement. But beyond that, the only other thing we got to look out for, like I said, it's Friday. I was going through the whole schedule there, but it's Thursday, Friday. You're going to be getting the CPI. Where is it? I was like 2 weeks ahead, but you're going to get the inflation rate. And the thing about it is that, believe it or not, after like 6 months of going down, it's expected that inflation on headline is going to go up to 3.3. Remember last time we hit the 3 handle, everybody was excited. We had 3% inflation. Well, we are expected to have a small bounce to 3.3. What I want you to notice, core, believe it or not, is expected to either come in line or right below. So that's good, and this should make sense to you, but this all has to do with the gas prices over the last couple of weeks. So if it's a real big beat or miss and inflation gets really, really hot, then we'll get some of that volatility. But if everything comes in line, kind of like the non-farms on Friday where you get like 1 good, 2 bad, it's going to be all about watching the bond market and seeing, does this data get people to react to the broader things going on in the market, and especially what we saw with bonds and yields and all of that last week. So that's going to be the main thing. Tomorrow, you're going to be getting a couple of Fed speakers. There will be like other data sets that come out, but for the most part, it's Thursday, Friday. Again, PPI after CPI. That will be important. You will get a couple of more earnings, and like I'm saying, last week was all about the big dogs, but this week you're still going to be getting a decent amount. Let's see who we have here. There's still some big names like UPS, Eli Lilly. Even tomorrow morning, you're going to wake up to Tyson Chicken, Palantir or Palantir after hours, Lucid. So it's a couple of smaller names, even AMC, Rivian, Roblox. You got Disney on Wednesday, Alibaba Thursday morning, and then a couple of other value plays there. So still a decent amount of companies, but now as far as like mega cap and bigger market cap, and even I think we've already reported about 60% or so, it's now going to be the remaining companies, and it shouldn't be too crazy, but it will get attention depending on what some of those companies report. So watch out for that. But other than that, we're going to see how we start off this week, the types of vibes we get into after last week. Keep your eyes on bonds. If they hold a movement like we've been saying, even the bear flattener, the curve steepener, and all of that good stuff. But really, just watch how the bonds go. 10-year above 4%. Does it keep rising up? Do we watch it calm down? That's going to be the other key. Other than that, let's get some of the data. Let's see where the market is, finish up earnings, and get ready to finish August. But now, let us get into the plays. So, right off the bat, I got a couple of different plays. I think some of them are quite surprising. And the first one, I'm just going to start off with it because I think we're wrapping up earnings, getting a little bit of volatility. And like we said with CPI, this is going to be the main story. It's oil and energy. And even after last week, XLE and some of these oil companies, they have been doing good. So, what I'd be looking for, any of the big energy companies, I'm already in Oxy. I've held those since end of last year. I think they came like right back to around break even, but I like energy plays. I'm still in HUSA. I'm down on this, and this is like an energy hype play. But overall, if we do watch oil go crazy from the 80s, because most people didn't even think it would hold up here so far, I think we should watch it. But I'm already kind of in plays, and it's about kind of riding them and playing the momentum rather than going all in and trying to chase it. But if we do watch volatility emerge, there could be some good plays, and I have a better speculation play after this. So I'll tell you about that in a little bit, but this is play 1. Watch energy, either big dogs or the hype plays. Then play number 2. Obviously, you should know this one. It reports on Wednesday, but Disney. I'm still in these shares. I was up like $300 or $900 on them. Came back down to break even. I think I am slightly up on them now. Actually down. I'm in at 86.50 on those 300 shares, but ideally I'm going to be looking to exit those before they report this week. And really what I'm saying, watch Disney for the pre-earnings run-up play. We might get a little bit of activity there, so I think that could be a good one. But watching Disney, I don't think there's going to be any crazy sympathies, but it could be big depending on what they say. But after the report too, depending on how Disney moves, I think that's going to be a good one. So watch out for them. But that is play number 2. And then finally, play number 3. This one's going to get interesting, but WEAT. We brought this up a couple of weeks ago. We got to take the first hits off of it. We sold off very good. It came back down, and if you have been watching, I've been telling you about this whole pop, drop, pop, and then come right back down here. It's starting to look like a good price, but here's the story. Last week, why some of the prices came down, there was talks about the deal having positive things. The Black Sea grain deal, they were saying that Putin might be willing to sign it, but now over the weekend, there was a couple of these drone attacks, and we were still hearing about some of the negatives. So it's back at a lower price here. You got people talking about inflation, food prices, energy. This could be good, but it's all going to be based on the headlines that you get. So what I'm trying to point out, watch the headlines. That's what's going to drive it. But at least here, you're at a better price than not. It like really gets crazy if you flush back into the lows. So it's not like there's no risk, but you're better and closer to the floor than not. So let's see how it goes there. And if I say floor tentatively, because again, remember back in the day, we used to go for a lot cheaper, but it has been cheaper since we did that whole thing where, let's see, I got to go to the 3-year. Hold on. Yeah. So you could even be down. It's 50% higher than where we were at just at the beginning or end of 2020. So watch out for them. But other than that, I made a flip on Apple. I'm still holding 500 shares I was going to get out of. I think this is going to be a post-earnings. And just don't forget, Amazon had a good one, and there was just a lot of plays last week. Those are the ones I'm going to be watching besides any of these. Keep an eye out for China and Baba too. We do have flip shares. I don't know if I'm going to hold them or not for earnings. That is what I'm going to decide. I'm hoping we could get other signals, but it just really depends how big or how small the pre-earnings is on Baba. That's going to make me want to get in or out of those shares. So other than that, that's going to be the main plays. Watching the data, getting ready for August, keeping an eye on the bonds. But Chad, that is your watch list, ladies and gentlemen. Make sure Hydrate Healthy ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, it's a long-term game, baby. And you are now almost at the end of this year. What are you going to do with your time? It is already August. Let me give you a reminder. Financial world ends in October. That's what I've said for years. They don't believe me. I'm giving you this warning early because I just want you to notice how fast this year has already gone by, how quickly things change at the beginning of this year, right when the calendar changed. So be prepared, be ready, be forward looking, be like the ant. Think winter when it's summer and summer when it's winter. And Chad, oh, you're ready, and the 10% will guide you. But I love you. God bless you all. I will see you tomorrow. Oh, whoa. That went, okay, is that awkward already? But be hydrated and healthy, and let's go. I was going to tell you to get rest. Get good rest. You know what I'm saying? That's what you need. You got to be prepared. You got to be rested. You got to make sure you use the weekend so you can have the stamina. I'm just crazy. That's it, bro. That's it. I hope I don't die this week either. You know what I'm saying? Last week was crazy. You got Uncle, baby. Uncle, I feel like Uncle Easy. Jungle G Easy. I'm just really weird today. That's hype, baby. Okay, horn. All right. That's. I don't want to wait for our stock market to be over. The chat thinks that I'm really going insane. Sorry. That's a good one. I could do another if. Okay,